Hello, good morning, all of you wonderful, amazing, and incredible cryptocurrency enthusiast, Block Thrasher followers. It is an incredible Monday, April the 12th. It is a great day for crypto. I'm super excited. Welcome to the Block Thrasher Daily Crypto Update, where we are shattering the complexities of crypto with news, commentary, analysis, and education. You know what's happening right now? This market's on fire. The market is on fire. We are seeing green across the board. The total market capitalization is now $2.139 billion. And you know what that means? That means, actually, let me just dial that back a bit. I was going to say that means that something about the total market capitalization, but that's not even true. The market capitalization for Bitcoin is now $1.126 trillion. And that means that the Bitcoin market capitalization alone is larger than Visa and MasterCard combined. Now, that's a victory for crypto, I would say. What do you think? All right, let's get into it. One of the incredible things that's happening right now is that Binance coin is just off the charts. It's insane, up 68.6% in the last week, up 21.9%. But the crazy thing is, it's now over $90 billion in market cap as it inches closer and closer to Ethereum. It's like, Ethereum, I'm coming after you, baby. So we're going to talk about why is that and what could be causing that to happen. Binance is increasing in its propinquity to Ethereum. Propinquity is an apropos word of the day. Propinquity, pronounced propinquity. It means nearness in place or proximity. And as we can see, Binance token now inching close to 40% of Ethereum's total market capitalization. Why? What's happening? What's going on? Let's jump in talking about that real quick here. We've got a story from Cointelegraph that covers some of the possible reasons, and then there's some other things I want to talk about. Binance coin reaches 37% at the time of this writing, which has gone up since then, of Ethereum's market cap. 3 reasons why Binance BNB is soaring. Binance coin, the native cryptocurrency of Binance Smart Chain, has been surging with a massive uptick in transaction volume. Binance coin, BNB, the native cryptocurrency of the Binance Smart Chain and top digital asset exchange Binance, is starting to close in on Ethereum in market capitalization. As of April 12th, yesterday, no, that's actually was earlier this morning. As of April 12th, BNB is now valued at $87 billion. It's actually up to $90 billion as we just looked. The valuation of Ethereum is hovering around $246 billion, which is a 2.8-fold, that's 2.8-fold larger or times larger than that of Binance coin. The technical momentum of BNB has been so strong that it briefly surpassed the volume of BTC USD pair on Binance. Now that's incredible because the BTC USD is one of the most liquid and most actively traded pairs on the exchange, and BNB USDT surpassed a BTC USDT. So why is Binance coin surging so hard? We'll take a look at what these guys had to say, and then I'm going to tell you what I think. Binance coin has been rising because of 3 things: an overall uptick in the popularity of the Binance Smart Chain. So if you're not aware, basically the Binance Smart Chain is a copy of Ethereum. It has an EVM, Ethereum virtual machine. It has just like Ethereum, use the same programming language, Solidity, for its smart contracts. And we're seeing a lot of projects, carbon copy essential projects. So you've got Uniswap on Ethereum, you've got PancakeSwap on Binance Smart Chain, and that sort of thing just goes on and on and on. So it's been rising because of the popularity of Binance Smart Chain. And we're going to talk a little bit more about why that's the case too. But they're also saying strong technical momentum and the gap between BSC and Ethereum projects. In recent weeks, the transaction volume on Binance Smart Chain has tripled the volume of the Ethereum blockchain. What? 3 times as much transaction volume on Binance Smart Chain? That's pretty staggering, isn't it? I tell you, I've been talking about this for a long time. Ethereum needs to get these updates done, and they need to get it done, fast, because it's not just Binance. Today, the Binance Smart Chain and BNB token is illustrative of something that's been happening. Today, Binance is the most illustrative of that because of its crazy price spike and usage over the last day and actually weeks up to today. I mean, the thing's just been pumping like crazy, but people are looking for other options because of the problems with Ethereum, because of the fees, because of the bottlenecks, because of the transaction times, because of the congestion and all these types of problems. And Binance is huge, and they have the marketing capability, and it's where people are already trading. And so this is a significant threat to Ethereum, a very significant threat to Ethereum. And if we look at the other competitors, they also are capturing market share. So Ethereum just needs to get get it going. Obviously, Ethereum's been doing well, but not like these are. And we can just see as this story and this day illustrates what's happening going on here. So in recent weeks, the transaction volume of Binance Smart Chain has tripled the volume of the Ethereum blockchain, particularly in Southeast Asia. The usage of Binance Smart Chain has been rising, according to Coin98, the biggest venture capital firm in Vietnam that is building a DeFi ecosystem targeted at Asia. So that's very interesting, but that also makes me just want to point out one other thing that I talked to you guys about the other day if you listened to the podcast, and that is that Coin98, it's mentioned here, is the biggest venture capital firm in Vietnam. And it is behind KuCoin. It is working with KuCoin, which obviously is, it's the number 9th or 10th exchange in market size and transaction volume, etc. So it's not Binance yet. However, it's a really great exchange that's located in Singapore that is going after the same market, Southeast Asia, which obviously is emerging and is huge. And the reason I bring this up is just simply to say that KuCoin's pumping today. We can go check that out later on. I think it's up like 17% or 10%, whatever it is, something like that. It was just $17 the other day. It's $18 today. It's nowhere near its all-time high, though, which was like $23 or $24. They're doing a lot of good things on the KuCoin platform, and they're looking at doing the smart contract kind of platform, et cetera, et cetera. So just a side note, again, just to make things clear as always, not financial advice. This is for educational purposes. I'm just bringing my analysis, thoughts, and research to you for your benefit. Do with it as you will. So continuing on with this, considering that the price of BNB was much lower than Ethereum until late March, this discrepancy between BNB and ETH likely made BNB a compelling trade. There's also a big gap in valuations between the Ethereum DeFi ecosystem and the Binance Smart Chain, which has been fueling a large portion of the demand for BSC projects. This has caused the value of BNB to rapidly rise over the past 2 weeks, while ETH has been relatively stable at just over $2,000. A journalist who covers crypto in China, known as Wu Blockchain, explained, BNB broke through an astonishing 600, but Ethereum's fees fell to its lowest point in a month. Although the transaction volume of BSC is 3 times that of Ethereum, the two are not in a competitive relationship. The top 10 addresses of BNB hold more than 88%. What? Is that true? Is it true that the top 10 addresses of BNB hold more than 88% of the token? And ETH is 20%. The future of Ethereum depends on the upgrade of EIP 1559 and 2.0. The only 2 things Binance needs to worry about are the government suppression and hackers. We've talked about it before. There are centralization concerns with Binance Smart Chain. So that's something to factor in to your research. That being said, you can't argue with the success that that BNB is having currently. However, I would like to confirm this issue of If 88% of the total supply of BNB is held by 10 addresses, that's a little bit of a problem. Because any one of those could dump at any particular time. Maybe those are exchange addresses. So some analysis on that would be good. And it's something I haven't done yet. I would do that. We'll do that at some point. All right. We've got another story about Binance, but I think I'm going to save that because it is probably the biggest story of the day. It's huge. It is absolutely huge. Let's just look at the market and finish the market overview really quickly. Whoa! Holy. The gas prices are down significantly. 83 gwei for standard. Wow. For a long time. For the longest time. Sorry. They were at 80. They were close to 200 plus, and now we're at 83 gwei for standard. Hey, this is the time to jump on Uniswap and make some trades if you've been thinking about it. Apparently, everybody's too busy over on the Binance Smart Chain. Wow. All right. Total market cap, as we said, 2.139 trill. Bitcoin dominance falling down to 52.7%, and Ethereum's down to 11.6%. Both of those are down a couple points. Bitcoin currently trading at $60,381. Oh yeah. Woo. Woo. Go Bitcoin. Can I get a booyah? Broke through the $60,000 barrier and has, it's been poking its head. Whoop. Up, over 60, down, up, over, down, back and forth. But it's been holding above 60,000 for quite a bit, for a number of hours. And this is good thing. It's only up 1.2%. So it's kind of funny to get so excited about really a small percentage increase, but there is something psychological right now about that $60,000 level. And you know what? It's April 12th. So the fact that we've been, consolidating, going sideways, but still rising, or at least not dropping, not turning into a bear market, is good. The longer that occurs, let's just pull up the Bitcoin chart really quickly and take a look. Keeping an eye on how long has it been that we've sort of been, jump out to the 180 day. Now let's go to 1 year. That's just going to give us the current. Actually, let's just hit the max. All right. Yes. This is what I sort of wanted to take a look at and illustrate. Now, when we went up to the previous all-time high, just around 20,000 in December of 2017, we started to drop down January, down to 7, February, January 8,000, 9,000, 8,000, 7,000 down really pretty quickly. I mean, we're talking in just between, December to the low of that crash coming in February, January, February. It's just a couple months. Now, if we look at this current bull market, man, we surpassed that 20,000 mark in December of 2020, kept going up to January, came down a bit, going back up through February, up 50, up March, all of March. We dropped down for a bit in March, down to 40, close to 45, back up, and we just keep going sideways. And look at that. It's getting tighter. It's getting lower lows, lower highs. It's just trending along, playing with. And so point here that I'm trying to make is, as I've been arguing for a long time, I think this bull market might be different with all the institutional adoption and other adoption and many other places that we can look at. We just might be seeing birthing growth of the cryptocurrency market. And we might not see, all the technical analysts, charting, all this stuff people look at, market cycles, they always, I didn't intend to talk about this. I was thinking about it earlier today, but I remember Warren Buffett saying he he doesn't subscribe to technical analysis because like you can flip the chart over and it looks exactly the same. And so he, just invested on fundamental analysis, investing on on stocks that companies that he understood that had a good business plan, had a good team, like he would do the research. And I think the same thing applies to crypto. Of course, you've got all these people out there that, have used whatever kind of strategy or the other to do their different types of technical analysis. And they're right about 50% of the time. I could do technical analysis like as they do, pull up some charts and say, so, well, if we see this, then we're likely to see that. And if we see this, then we're likely to see that. And that's a lot of what it is. A lot of if this happens, then that. And you make these projections and you're right half the time. So I'll do it. Sure. Yeah. There's a 50% chance that Bitcoin's going to rise tomorrow. There's also a 50% chance that it could drop tomorrow. Guess what? I'm going to be right. Anyway, where was I going with that? Big picture strategy, not strategy, but big picture analysis of the cryptocurrency space. The market is so young. The market is so new. This is not an established market. I mean, if we're talking about a stock market with equities that, and companies that have been around for maybe 100 years or 50 years, or let's just even say 20 years, then there might be a little bit more credence to some of this analysis. But when we're talking about a nascent market like crypto, the thing could go up 100%, 1,000%, and then continue to go sideways or even continue to go up because it's such a small fraction of the total monetary supply. It's a small fraction of the total economy. It's a small fraction, even just compared to the one commodity, which is gold, which is what, $9 trillion? So you look, when you just scale back and just apply some kind of basic, analysis to the big picture thing, you say, hey, we don't have to. Now we might, I mean, there's volatility. Sure. We might see a drop. I doubt it. I don't think we're going back to $4,000, $3,000 Bitcoin, or maybe even 20, maybe something. There's some significant news, some event, some government regulation or something that just spooks the market and everybody's like, wow, pulls out. Could happen. And we might go back to 20,000 or something like that. There's enough true believers, though, in the crypto space that are going to hold on. Absolutely, sure, totally confident of that. All right, let's just move forward. We still haven't even finished the market overview of prices today. Ethereum is up 7.7%, just tiny little little bit. In the last 24 hours, it is currently trading at $2,154. Binance, we already covered that, $568.86. It's just kind of mind-blowing. I mean, not that long ago, it was what, $30. A couple weeks ago, a couple days ago, just a couple $100. It's up 68.6% in the last 7 days. All right, XRP also just big time breakout right here, up 116.7% in the week, up 3.8% in the last 24 hours. Let's just talk about XRP for a little bit. We do have a story to look at. Actually, there's some good. This was a really great article on this. I think we'll dive into this a little deep a little bit right now, but just kind of real quick overview. Good news, like really good, objectively good news that we'll look at here concerning XRP and its legal case with the SEC. However, that being said, nothing actually totally conclusive as to the outcome of what's going to happen. But there is good news. Let's look at that. The Xrp price surges over 40% following another legal victory for Ripple. There's a court ruling that was in favor of Ripple. Xrp, the native cryptocurrency of the Xrp ledger created by Ripple Labs, surged more than 40% over the weekend, rising from $1 to a high of $1.47, its highest level in 3 years. XRP is trading at $1.35 at the time that this article was published. Right now it's $1.39, so pretty much just the same. The XRP price surge follows yet another court ruling in Ripple's favor. And I'll tell you what, you're going to like this. When I read this stuff, it just made me laugh. The second victory for Ripple in the same week, as part of the discovery phase in the U.S. Security and Exchange Commission's lawsuit against Ripple XRP, which had been, sorry guys, I just had to pause for a minute and check that I was actually recording, because I've done that before. I've done like an hour-long podcast and then realized, ooh, I didn't hit record. Anyway, all right. So 2 victories in the week. As part of the discovery phase in the U.S. Securities and Exchange Commission's lawsuit against Ripple, XRP, which had been the 7th most popular cryptocurrency only a week ago, is now the 4th largest cryptocurrency in the world by market value. Okay, we know all that. Let's get to the meat of this deal here. Come on. On Friday, U.S. Magistrate Judge Sarah Netburn, who I like more and more every time I hear about her, at least at this point, rejected the SEC's demand for up to 8 years of personal financial information on Chris Larsen, Ripple's co-founder and executive chairman, and Brad Garlinghouse, Ripple's chief executive officer. So this judge, Sarah, just shut down the SEC. You gotta love it. The judge also quashed the subpoenas served by the SEC on SVB Financial Group, First Republic Bank, the Federal Reserve Bank of New York, Silver Lake Bank, Silvergate Bank, and Citibank that had sought to obtain Larsen and Garlinghouse's personal financial records. It's like a big old slap on the wrist, SEC. No, the judge says no. Why? Here's the quote from Netburn. The SEC's request for the individual defendant's personal financial records, apart from those records of XRP transactions that are already promised, are not relevant or proportional to the needs of the case. She said this in her ruling. I love it. This is a judge doing what a judge should do and protecting the privacy of an individual from a 3-letter acronym government agency, which we know one of their strategies that they love to do is to charge somebody with some crime, right? Potential crime, and then use that to go in and just go fishing, grab these guys' personal financial records and see, oh, maybe, okay, so maybe we don't get them on the securities, the selling of unregistered securities by basically, which is, it's funny because who was it? It was another guy that got nailed by the SEC for something. I'm blanking on the name. He had started a gambling site or something to this effect. And anyway, he was like, this is just a made up law. And it is. I mean, a lot of these regulations, the SEC is a charter of Congress. It was created by Congress in 1933. It was actually created by Congress, but under the direction of Franklin Delano Roosevelt. It was 1934, correction, 1934. 1933 was the Gold Compensation Act. 1934 is when the SEC was created. And it was given these powers, which are just like almost unlimited powers, to regulate this industry and to try to prevent fraud and all these other kinds of things. So they do some good things. However, this is not, this is part of how the representative system within the United States works, right? Where we send representatives to Congress and we elect a president, and then they, unfortunately, over time, they've sort of delegated off a lot of things to these governmental agencies. A lot of them are 3-letter agencies: the FBI, the CIA, the NIA, the whatever it is, the SEC, the FDA. You can go on and on and on. And then what happens is these regulatory agencies who are not elected officials, they just grow, and they just like a fungus. They just create more and more rules, which are essentially laws. IRS, another one of them. And these then they create these rules internally with their they have a commission or they have a whatever committee, and they create these rules, and these rules essentially become laws. And then what happens is if a company or an individual or a person violates these rules, laws, then they have to go try to defend themselves in court. And the judge has to decide whether the rules that have been put in place were actually violated or whether they were even constitutional in the first place to begin with or not. And then sometimes the only way to get restitution would be to take it all the way up back into the Congress or other higher federal courts or whatever the process might be. But for most people, for most entities even, they can't fight the governmental agency because the SEC or whoever it is, the IRS, whoever it is, has limitless funds, incredibly deep pockets, and it will just destroy whoever it is. Now, it's interesting in this case with Ripple Labs, they obviously have the money to fight as they are. And not only that, they have this massive community of XRP holders who were negatively impacted, who also want to fight. So there's money there. There's funds there to fight the SEC, you know, collectively. So it's just interesting thing to watch. So here in this case, we have an example of a judge just saying, slap on the wrist. Nope. What you're trying to do here, you know, this strategy of just go after and use the case to get into these guys' personal information, just get everything, you know, which probably would, you know, who knows where that will lead. But nope, we're going to protect them because this is an unreasonable, right? The Constitution protects private citizens in the United States from an unreasonable search and seizure. They should be safe and secure and have privacy in their papers and their data, et cetera, sort of stuff, obviously, which much we just don't have. Because what's interesting is, you know, even though the judge says no and rejects this demand for 8 years of personal financial information, any one of these entities, whether it's SVB Financial Group or Citibank, whoever it is, could certainly just hand it over to the SEC. And that's a legal thing. And they do that kind of thing all the time. All right. So the judge said the SEC's request for the individual defendant's personal financial records, apart from those of the records of SRP transactions that are already promised, are not relevant or proportional to the needs of the case. Thank you, Netburn. Thank you. This is a good judge. Last December, the SEC filed a lawsuit against Ripple, alleging that its sale of XRP was an unregistered securities offering worth over US $3.138 billion. The SEC also named Ripple's executive chairman, Chris Larson, and CEO Brad Garlinghouse as co-defendants for allegedly aiding and abetting Ripple's violations and making $600 million in personal profits from their unregistered sales of XRP. And the thing is this, the SEC has a point. These guys did profit immensely and continue. I mean, just today, I wasn't even going to mention it, but Jed McCaleb, one of the original co-founders of Ripple Labs and XRP, dumped another, I don't even remember, $1 million worth or something. This happens every single week, though, and they keep, you know, recirculating this story as if it was, you know, it's not new news. Like, we know at this point, we know that this is just what happens. But at the same time, this is what happens. This is how the stock market works right now. Listen, Tesla, Apple, you name it, any of these stocks are just at insane all-time highs, pumped through the constant creation of new money that's being injected, whether it's through quantitative easing, through stimulus checks, through bailouts. I mean, you name it. Since 2008, that spigot has been opened up wide and the money has been flowing. The market is up. Generally speaking, many of the CEOs and corporations don't even care about turning profits, or they're making so much from the valuation of their stocks alone. And this is the game, right? And they profit immensely. This is just the way that it works. And then, so the same thing happening here with Ripple. It's just that it happens to be with a crypto related company, Ripple Labs, who is providing a service and a product within the banking sector. All right, moving on. In a letter to the judge in March, defense lawyers for Garlinghouse and Larson had argued that the SEC's multi-front attempt to troll through the individual defendant's personal financial information is a non-fraud litigation, where the defendants have already agreed to produce the relevant information regarding the challenged transactions, is a wholly inappropriate overreach. So this is what the lawyer said, and apparently the judge agreed. In her 10-page ruling, Judge Netburn noted that the, quote, case is in its beginning stages, and the SEC's rush to serve requests and subpoenas seeking duplicative information of records already promised is premature at best. The court is not, this is again the Netburn stating, the court is not convinced that the personal banking records would show or even could show what the SEC claims they would, individual violations of Section 5. Under Section 5 of the Securities Act, all offers and sales of securities must be registered with the SEC. Section 5 also regulates the timeline and distribution for issuers who offer securities for sale, the determination of which could go to the core of the SEC's case and Ripple's defense. So see, that's how it works. You've got Section 5 of the Securities Act, which was signed off by Congress. And it's one of those things where if you want to fight it, you have to go through the legal process, right? It just gets done. And then anyway, I already talked about the SEC versus Ripple's lawsuit, why it matters. The SEC's lawsuit against Ripple is being closely watched by the Xrp community. Yeah, no doubt. And the cryptocurrency industry around the world, given not only the potential impact on Xrp investors, but also the legal precedent it could set for other cryptocurrencies. Yes. Following the SEC's enforcement action, many cryptocurrency exchanges in the US, including Coinbase and Kraken, suspended trading of Xrp, and the price plummeted by more than 60%. But Xrp prices have since recovered from the fall. The price of Xrp is currently more than five times what it was in December after the SEC launched its lawsuit. At the heart of the lawsuit is whether transactions involving Xrp constitute investment contracts and therefore securities subject to registration under Section 5 of the Securities Act of 1933. Ripple contends that Xrp, like Bitcoin and Ether, is not a security, and the SEC had failed to provide Ripple and the market with fair notice that it was a violation of security laws to engage in Xrp transactions. You gotta agree with that. I mean, XRP's been around, what, 7 years now? 6, 7 years? And no notice? The SEC, on the other hand, is arguing that XRP is different from Bitcoin and Ether and that they are irrelevant to the Ripple lawsuit. According to the transcript of a separate hearing before Judge Netburn on April 8th, SEC lawyer Dugan Bliss said there was never a central promoter profiting from an ongoing offering of Bitcoin or Ether. So, XRP is nothing like those other digital assets. But Netburn disagreed with the SEC's reasoning. Boom. Let's read it. What'd she say? If you are saying to me, Judge, they shouldn't get documents related to Bitcoin and Ether because those are just totally different assets. They have nothing to do with XRP. If I'm to make a discovery ruling on that conclusion, wouldn't I just be deciding the case? Netburn wrote. The judge ruled to grant Ripple access to the SEC's communications with third parties regarding Bitcoin, Ether, and XRP. Quote, Netburn said the discovery related to Bitcoin and Ether is relevant. I think it is relevant to the court's eventual analysis with respect to the Howey factors, but I also think it is relevant as to the objective review of defendants' understanding in thinking about the aiding and abetting charge of aiding and abetting count. I also think it is relevant to the fair notice defense that Ripple is raising. Yes. I don't know who Netburn is, but I like it. It is clear that the impact of this lawsuit on many stakeholders, from Ripple and the company executive suit to XRP investors and the crypto industry at large, is weighing on the judge. She also said, I recognize that this is high stakes litigation and that people are quite invested in the outcome of the issues, including the individual's defendants who face serious individual liability. Jeremy Hogan, a partner at the law firm Hogan & Hogan, predicted in a tweet, "I recently suggested that the court would not grant Ripple's motion for discovery if it intended to dismiss the fair notice defense. Inversely, I think Brad Criss can take this as a good sign as to their motions to dismiss the lawsuit against them." All right, that's enough about that. But good stuff. All right, let's jump back to the market prices. Let's see where we sit. All right. Whoa, Bitcoin is up since we began, up another $100, up 1.8%, now 60,419. Continuing to look good. All right, where were we at? XRP, all the way down. All right, Cardano. Cardano is up 10% for the week, up 4.9% in the last 24. Cardano is currently $1.30. Cardano looking good. All right, Cardano market cap, 41 bill. XRP, 60 bill, 60, 70, 80, 90, 100 billion there, 90 billion for Binance. That's almost 200 billion. Those three coming close to Ethereum. Well, you throw in Polkadot, Uniswap, you get there pretty quick. Cardano, $1.30. Polkadot, $40.72, up 0.9%. Very little movement with Polkadot in the last 24 hours, and it's down 8.2% on the week. It's been a rough week for Polkadot. Uniswap is up 11.4% in the last 24, now $33.40. Go Uniswap. Litecoin up 0.8%, but it is up 24.4% for the week. Currently $252.88. Chainlink is up 2%, $33.01. Stellar up in the number 11 spot in terms of total market cap, up 37% this week. Stellar had a great week. Little movement in the last 24 hours. Is currently 58 cents. Bitcoin Cash up 21% on the week. No change in the last 24 hours. It is currently $679. Theta is holding tight. Number 13, $12.05. Theta's on pause, which I remember I mentioned to you guys probably maybe a week ago that was my expectation. I felt like Theta had, broke into the top 10 and sort of, it had this incredible pump, which was fantastic to see. But going beyond that level, just sort of, I think we could see it rise with the market, but I think its pump is done. Again, could be wrong, but that's my thought on that one. Filecoin, same thing with Filecoin. Filecoin down a little bit for the week, very little movement, $174.19. I think what happens with some of these really great projects is that they just sort of get this initial awareness. I mean, they've been around a long time, Theta, Filecoin, but they get this pump with initial awareness, and all people go, "Wow, these are really great projects, and I want to support these projects. I want to get in. This is good technology." In both cases, the Theta network with its decentralized video delivery system, YouTube type of system, and Filecoin with its file storing type of system, your AWS replacement, your Dropbox, etc. Really two great real use case projects that I'd love to see succeed. But they get that initially, they got that notice, they got that awareness, they pumped, and now it's just probably going to be more of a steady growth. I mean, unless the market, they're going to move with the market, essentially is what I'm trying to say at this point, right? Tron is up 7% in the last 7.6% in the last 24 hours. It's 13 cents. Dogecoin saw a bit of a pump on the week, up 23% to 0.07. It's coming in at number 17. It's just slightly down in the last 24 hours. VeChain saw a big pump this last week, 45.1% up. Currently down a little bit in the last 24. It's at 13 cents. There's been some good news for VeChain in its use with Salesforce. Salesforce has decided to use VeChain for a couple of its product features. Solana up 16.4% for the week, up 7% in the last 24 hours. It is currently $28.37. Solana being another smart contract platform that looks to have some good promise really great technology and a good team over there. All right, I think, well, Monero would be the only other one, and maybe OK. I'll talk about those real quickly. Monero, the privacy coin, is doing really well, actually. $338.30. That's quite phenomenal, actually. Up 28.3% in the last week, up 14.7% in the last 24 hours. It's good to see one of the OGs like Monero. I mean, the Monero has just been around forever, and in the top 10 or 20, 25. I mean, it's at 22 currently in terms of market cap for a long, long, long time. It's a great project. It and it's pumping currently, so that's a good thing to see. And then OKB, the OK Coin Exchange token, up 31.3%, 16.2% in the last 24 hours. It is currently $23.70, and I think it could be enjoying some notice because people might be thinking that it also could see some of the successes that Binance BNB token coin is experiencing or enjoying at the moment. I think that might be some of the thought there. And there's some other good news out there for OK Coin and the tech that they're working on currently as well. All right, that's enough for market overview for the prices. Let's jump on to some of the other stories of the day. Here's a recurring, revolving story. The Indian government, it's on, it's off, it's on, it's off. Currently, it has an open mind. The Indian cryptocurrency community has been witnessing tremendous growth, but a lack of regulatory clarity has been a significant roadblock. Although the government of India has been apprehensive of cryptocurrencies, it has recently been talking about keeping a, quote, open mind and working to boost the development of a national digital fiat, CBDC. Anurag Thakur, Minister of State Finance Ministry, cleared the air about the alleged ban on cryptos like Bitcoin while talking about the crypto bill that is yet to make its way to the parliament. I'm not going to dive any more into this. It's just the same over and over again. It's like, yeah, we're going to ban it. No, we're not going to ban it yet. So until we have some actual clarity, I don't know if there's much reason to talk about it. All right, let's get on to some really, really great stories that illustrate adoption. I'm going to save my favorite and first talk about this one. Romanian university accepts crypto payments. A local public university in Romania becomes the first in the country to allow students to pay for fees using cryptocurrency. That's cool. All right, here's the big story of the day in terms of adoption, in my view. When I was young, there was a season of my life where my thoughts, my mind, my passions were wrapped up in baseball and baseball cards. Oh, man. It was a thing. Beckett Baseball Card Magazine, the monthly price guide would come in the mail. I signed up for a subscription. I remember one of the biggest specific memories for me, and if you're baseball guys who are old enough to remember the 80s, like 1988, 1987, 1988, 88 being one of the greatest World Series ever with the Dodgers. And I actually happened to live in Los Angeles at the time, and I followed that entire season on the radio or TV with my dad. It was just good times, good memories. But I remember getting a Beckett Baseball Card Magazine with Greg Jeffries. Ken Griffey Jr. was huge at the time as well. But Greg Jeffries was supposed to be, he was on the Atlanta Braves, and he was supposed to be, the rookie. I think he was rookie of the year, and he was going to be the next, superstar Hall of Fame baseball player or whatever. And I remember going down to the gas station nearby and buying my baseball cards and going through pack after pack, just as many as I possibly could, looking for that Ken Griffey Jr. rookie. And I got one, and then I got another one, and then I got another one. And, David Justice was supposed to be huge too. And most of these guys just absolutely fizzled and didn't perform as expected. Ken Griffey Jr. did okay. But I'd put those baseball cards out on the floor in front of me, and I'd look at them, and I'd go through the price guide, and I'd write down like a spreadsheet on what cards I had and how much they were worth. And I was like, oh man, I've got $200 worth of baseball cards. I'm rich. I was like, what, 12 or 13, something like this. And then it's funny. It's just like as the years progressed. Well, at some point, I was like, all right, I'm a little bit too consumed by this, and I need to set it aside. But also, those cards started to just lose value, and then baseball companies like Topps, they got smart and they started creating these specialty cards that had a little bit of a patch from the player's uniform, and then they started doing limited runs where it'd be like 1 of 100 or only one or something like this, and then it became a thing like where adults started to really get into it even more, and there was bigger money and whatnot. All of that, ton of fun. Obviously, there's a ton of affinity for sports in the United States. People love their sports. The loyalty of fans is huge. All of that is coming to the cryptocurrency space. Major League Baseball is taking a swing at the NFT market. The story from decrypt.co. Topps on Monday, Topps being one of it's the top baseball card company in the US. I've been out of that space for so long that I don't know who their competitors are at this point. I remember some of them from back in the day. But they on Monday announced that they will release its 2021 flagship baseball card collection as NFTs for the first time in partnership with Major League Baseball and Major League Baseball Players, Inc., the for-profit commercial arm of the Major League Baseball Players Association. And I think this is just phenomenal and absolutely huge. This is a win for Major League Baseball because it's going to create a market. It's going to drive interest. All the crypto people that are going to want to jump in to see potential gains on these assets that they purchase. But also, this is good for the crypto space because you've got all these baseball fans that are going to be like, what's this NFT thing? Where can I buy and sell these? Oh, and you with Ethereum or whatever it's going to be, whatever platform they end up using, probably Ethereum at this point. And then you're like, what's Ethereum? This is just good. I'm so excited about this. So these are the first official Major League Baseball sanctioned NFTs. Panini has launched blockchain-based cards, but does not have a licensing deal with the league. See, and this is, I remember Brandon Fenchek, Vulcan Trader, and I were having a discussion. Actually, I just uploaded the podcast for that. We did it weeks ago, but I finally got it edited and uploaded. Be sure to check that out. It was a great podcast, a great discussion. And we got into NFTs because he was a little like, is there any real value there? Or is this whole thing just kind of a joke or, like scammy or whatever? And at that time, one of the things that I talked about is that you do have these licensed products. And this is an example of that. This is like a perfect use case, whether it be licensed products connected to movies that are owned, that are licensed, that in the Hollywood, in the movie industry, or in entertainment or music. And now here, this is copyrighted, licensed content that, yeah, it's like someone could argue, because remember the discussion he was saying, Brandon, was that, somebody can just, if it's a digital picture, they can just copy it, right? And then they have it. So, and with baseball cards, you could argue the same thing. Now, you had a physical baseball card, so you had that in your hand, and that gives you value. That gave you value because you could go and you could sell it. And that's really what it's about. It's about the sellability. And so with this NFT, it's the same thing. Like you have that, you're the only one. You have that, or maybe you're one of a number that have that NFT. And it's just a digital version. There's a little bit of a mind thing going on there. Like, okay, something physical versus not physical. But what gives the physical thing value really is not that you have it to look at, because you could just have a picture on your phone or whatever. And that can be recreated in our day instantly and at no cost. However, what gave it value was that it had a certain limit to it. Like, not everybody, you couldn't just create it out of nothing. And the same thing for the NFTs. It's the limited aspect of that particular NFT that is on the blockchain that only you have, that gives it sellability, that gives it value. And so this is just an interesting thing. I got a little bit off on a sidetrack here, but this MLB NFT series will go live on April 20th on the Wax. Oh, they did. Okay, so they're not using Ethereum. They're using Wax, the worldwide asset exchange. Topps also used this for its Garbage Pail Kids NFTs last month. Wow, okay. I didn't even read that part yet. Garbage Pail Kids 2. This is so cool. It's first time turning its trading cards into NFTs. Topps says its Series 1 NFTs will include iconic throwback card templates. No way. Oh, wow. For those of you who can't see the image here, these are a lot of the cards that I had and traded when I was see what's going on here? This nostalgia. This is huge, guys. Bringing back these old cards, which are pretty much worthless at this point because they printed so many of them and the quality was crap. The quality was really crap back in the day compared to what we have now. And now they're doing iconic throwback card templates with NFTs attached. This is brilliant. This is this could be so much fun. And also there's so much value that can be pulled out here. NFTs or non-fungible tokens are blockchain-based crypto tokens, unlike Bitcoin, represent ownership deeds to digital or physical assets like virtual trading cards, albums, artworks, or concert tickets, and are verifiably scarce, typically one of a limited batch or sometimes one of a kind. The market for NFTs has exploded, with certain rare examples fetching millions of dollars. You know, it's incredible to think Satoshi Nakamoto, whoever he was or they were, I don't think could have ever imagined where this has gone. And this is one of those things that I've talked about, this whole Bitcoin maximalist thing for a while. And these people who have the desire to see Bitcoin become like the Bitcoin standard, like the reserve currency of the world or something like that. And who knows? I mean, maybe there's a place for that. But look at all of the value that is being created here with stories like this, where we're taking long-standing traditional markets and bringing them to the crypto space. Wow, I mean, just talk about mass adoption. And I don't even know how, words fail me right now to try to communicate how big I think that this whole type of thing could actually become. All right, let's talk about our number one story of the day. This is direct from Binance's PR release. This is another huge thing. Binance is now allowing for the trading of stocks, equities on Binance. Today, we are launching zero commission tradable stock tokens. Another thing that Brandon and I had talked about maybe we didn't talk about it on one of our podcasts. We talked about it. Maybe we just talked about it with each other. You know, there's some of these derivative type projects out there like synthetics, where you can get assets to the stock market, but they're derivatives. So there's no actual purchasing of the underlying asset. So the question I immediately had when I saw this story was, is it going to be a derivative? And if it is it going to be a derivative that's actually backed by the asset or not? So let's check it out here. Now, according to this press release, you can access both cryptocurrency and traditional stock markets, all from the comfort of your Binance account. Each stock token on Binance will represent one share of equity stock, which is fully backed buy shares stored in a depository portfolio of underlying securities in cooperation with investment firm CM Equity AG and asset tokenization platform Digital Assets AG. Huge. So that answers the question there. Yes, these are essentially tokenized derivatives, but they're not. They're actually backed by the asset. So not really derivatives, but kind of, because sort of like the futures contracts on the CME, which we're going to look at a story related to that here a little bit as well. You're supposed to be buying the underlying. In this case, they're saying you're actually buying the underlying asset, but you can't take delivery of it. It's going to be settled in BUSD. The first stock tokens on Binance will be Tesla Inc., the largest automaker by market capitalization. Tesla stock tokens on Binance will have a minimum trade size of 1/100th of a stock token, representing the same fraction of a Tesla share. Stock tokens are priced and settled in Binance USD, BUSD, a regulated stablecoin pegged to the US dollar and issued by Paxos Trust Company. Watch out, Robinhood. Now, interestingly enough, Robinhood was the largest crypto exchange by volume, I think. I could be wrong. I'm pretty sure I've read that a couple times. And so this is sort of like the flip of that. Robinhood obviously becoming a huge retail stock broker, essentially, whatever you want to call it, platform, allowing for the purchase of fractional shares of stock and all your buddies jumping on, right? And playing with the stock market. So Binance is going the other direction. They were the crypto exchange, the world's leading, who's like, we're going to offer stocks now, and it's going to be tokenized. So all that funny business that happened on Robinhood with Wall Street bets and GameStop and all that sort of thing shouldn't happen. Right? I'm going to say because who knows? There are issues here. That's all centralized. It's in partnership with this CM Equity AG, and so funny business could happen there. This is not crypto, but it's a really great way. Think of all the crypto holders out there, OGs that had Bitcoin from a long time ago, or whatever. Maybe want to play around, but they don't want to deal with a Robinhood. They don't want a typical broker, whatever. But it's easy to go into BUSD on Binance and play around with Tesla for a little bit or something if you want to. I think this is huge. I don't know if this is the factor of why BNB is pumping as it is today, but because I don't know how many people have heard about this because this was just released. But this is going to be another boost. I mean, this is very smart of Binance. Stock tokens make it easier for Binance users to gain access to highly sought after assets like stocks. We are offered these unique advantages to traders such as liquidity. Adding stock tokens to Binance makes it possible for investors to trade both crypto and traditional assets straight from the world's biggest crypto exchange by trading volume. Flexibility. We are making it possible for users to trade fractions of a unit of publicly traded equities, turning them into more affordable units that have lower barriers of entry, such as like Robinhood or Webull or some of the others. Access to traditional stock benefits. Holders of stock tokens qualify for capital returns on the underlying equity, including potential dividends and stock splits, as they would from holding traditional shares. So see, that's the proof in the pudding right there, that they actually are backed by the underlying asset. This is so cool. This is huge. Access to our crypto financial suite. Aside from trading benefits, we also offer a wide-ranging suite of crypto financial services that augment your trading experience, from loans and saving products to liquidity pools and token launch platforms. Here's what Shengpeng Xiao, known as CZ, said. Binance serves many users around the world, and we are very pleased to be able to help them participate in the equity market. Stock tokens demonstrate how we can democratize value transfer more seamlessly, reduce friction and costs to accessibility without compromising on compliance or security through connecting traditional and crypto markets. We are building another technology bridge for a more inclusive financial future. Yes, yes, yes. Amen, amen, amen. During the first quarter of 2021, Binance recorded a 346% growth in users, fueling a 260% growth in total trading volumes as the total market value of cryptocurrency shoots past $2 trillion. Blah, 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 blah. Wow. They continue on a little bit. You can go check it out if you want to. But stock tokens on Binance. Kind of blown away. This is a good day for crypto, guys. So many exciting things happening. This is a very smart move too, even from a regulatory standpoint. All of this is regulated. You know, you're going to have to do your KYC and AML and all that kind of stuff. But this is just another marrying of intertwining of the traditional financial world with the crypto world, which always has its pluses and its minuses. But if a whole bunch of value is wrapped up in people holding equities through Binance, it becomes increasingly untenable for regulators to want to just shut all that down. Follow what I'm saying? So there's another angle in why this is such a good thing. All right. On to our last story of the day. This guy, Austin Arnold, of, they've got a channel, Altcoin Daily, is warning that the crypto markets could play host to some major price manipulation in the coming months. And I'm talking about this because I agree with what he's saying. But I agree with what he's saying from a technical standpoint, but I also don't think there's some reasons to think that this might not happen. And then so I'll talk about that. But first, let's talk about the idea here. In a new video, the crypto trader says that the introduction of Bitcoin micro futures, which are contracts for 0.1 Bitcoin, by the Chicago Mercantile Exchange, or also known as the CME, in May, could allow traditional market actors to influence the price of Bitcoin without having to actually own or hold it. And we've seen this happen in other commodity markets like gold and silver. Many people don't know. But with these future contracts, because the underlying asset is never purchased and you can't claim delivery on it, it has allowed for the sale of more of the asset than actually exists physically in the world. So more gold is sold than actually exists. More silver is sold than actually exists. They're just derivatives. But it impacts the price because it creates this paper market that isn't based on reality of how much of it actually exists. And so that's the argument here. Let's see if they explain it. If not, I'll explain that a little bit further and how that would work with Bitcoin. The contracts target retail investors and provide a completely legal way for investors to manipulate the price of the flagship cryptocurrency, notes Arnold. Futures contracts are known to be vulnerable to spoofing, whereby many contracts are opened with no intention of being executed, creating false bearish or bullish sentiment. The expiration dates of BTC futures contracts have also long been speculated to be associated with dips in the price of Bitcoin. Okay, here's what he said. Ultimately, if the big guys are able to do this with the CME contracts, with what the CME contracts offer now, this is a good thing because it does give the little guy equal exposure to these derivatives. this is also a bad thing because it will lead to market manipulation. With CME cryptocurrency futures, investors, traders aren't required to actually ever hold Bitcoin. You do not need a digital wallet because Bitcoin futures are financially settled, meaning settled in fiat, and therefore do not involve the exchange of actual Bitcoin. All right, which is what I was just saying. Arnold says that while the CME just has micro futures for Bitcoin as of now, they also have regular size contracts for Ethereum, which are already trading at significant volume levels. Okay, they don't explain this further. So basically what happens with this situation is this, there's 21 million Bitcoin, which gets traded on exchanges. That Bitcoin that is traded on exchanges, it is possible for exchanges to do some funny business. And by funny business, I mean fractional reserve banking type of funny business where they have an internal ledger that has nothing to do with the Bitcoin blockchain. So let's just use Binance as an example. I'm not saying they do this, but they could. They could sell 200 million Bitcoin if they wanted, even though there's only 21 million Bitcoin. How could they do that? They can do that if they know, because they have the data, if Binance users leave the Bitcoin that they believe they've purchased on the exchange. If they never withdraw it, then Binance doesn't have to deliver the Bitcoin, doesn't have to actually come up with on-chain Bitcoin. And then if a trader goes and trades that Bitcoin for another asset on the exchange, it's just a database entry that occurs. No on-chain, it's an internal database entry that happens. No actual on-chain record. It's only when someone withdraws that crypto from the exchange to their private wallet that Binance actually has to come up with that Bitcoin, that whatever the crypto is. And so if it's only 10% of the total amount of Bitcoin that is bought and sold on Binance that ever gets withdrawn on a given day, let's say, Binance knows that. That means that Binance could sell 90% more Bitcoin than they actually hold because they only have to come up with 10%. Not only that, they can shift around assets if need be to go and get whatever the asset is that they need to deliver to somebody who's asking for it to be sent to their actual private wallet. When it comes to the CME and these futures or these derivative products, and it's not just the CME, this can happen anywhere. It's not only could they be doing what I just described with Binance, but they are actually, because they are not purchasing the underlying asset. There's no Bitcoin or Ethereum ever, on-chain Bitcoin or Ethereum ever being bought or sold. And what does that mean? That means that it's a market that's just tied to. See, that's what a derivative is. The Bitcoin that you supposedly buy, you don't buy on the Chicago Mercantile Exchange, is just an asset, digital asset created on the CME, tied. Its price is derived from the actual price of Bitcoin trading, spot price of Bitcoin trading on exchanges. So what does that mean? That means that there's no limit to the amount of Bitcoin that can be sold that way, but it's not actual Bitcoin, right? So we could see that happen where we have a market develop on the CME that dwarfs the actual spot market. That could happen. We could have 200 million Bitcoin. We could have any number of Bitcoin sold in that way. But see, it's not Bitcoin being sold. It is the derivative that is being sold. But then what happens is this market influences the price. And when people take out these contracts and they get liquidated when the spot price drops, then it causes a little bit of a panic, and it just affects the price on the spot markets, and it goes up. And so this is how the market could be manipulated, because people will pay attention to what's going on the CME and correlate sentiment or whatever about the Bitcoin price. Now, and this is Austin's argument, and it's a valid argument, and I agree with it. Here's where things get interesting, though, is that it's more obvious that all of that's being done when we talk about Bitcoin than it was with gold or silver. Like, a lot of people don't understand that with gold or silver, because typically if you're buying gold or silver, even in an ETF or other ways, you don't necessarily want to get physical delivery of it, where a lot of crypto users do. And that's an easy thing to do. It's just a matter of a transaction, and it takes seconds to withdraw your Bitcoin and get it to your personal private wallet. And there's been this thing within the crypto world of not your keys, not your crypto, which is also true, because they could just disappear or they could get hacked. And there's a lot of these exchanges and places don't have any kind of insurance to protect against that, and you'd be up the creek. So there's that factor. It's also more obvious in the sense that Bitcoin is actually limited, and it's a publicly available database ledger, basically, blockchain, that people can go and look at. And then you're like, well, look, there's all this volume and all these transactions and all this stuff happening on the CME. Nothing's happening on the blockchain, on the Bitcoin blockchain, though, or relative to that. There's this big difference, this divergence. So what's really happening versus on the Bitcoin market, Bitcoin blockchain set versus what's happening on the CME, it's easier to see, right? It's like, it's more obvious. The other thing is that you have this whole entire crypto market and space. And so as Bitcoin loses its dominance and the other alts rise, it lessens the impact. Right now, Bitcoin drives the market. Bitcoin goes up, the alts go up 10 to 15%. As Bitcoin goes down, when there's going to be a decorrelation, who knows? But as Bitcoin, if it continues its recent trend to drop in dominance, that illustrates that more and more of a decorrelation between the alts and Bitcoin is happening. Even seeing things like Binance now being $90 billion, right? Illustrate that. And so that's a good thing, because it protects the market as a whole against manipulation like that could happen on the CME. All right, that's it. Enough about that. All right, let's just wrap things up really quickly here. We've gone long today, I know, but it's all been good stuff, I think. Let's just run through some crypto terminology really quickly. We're in the D's. All right, do your own research. DYOR. DYOR, common acronym. You're going to see it all over the place if you follow cryptocurrency, and it's something that I'll probably say, because as much as I strive to bring you the best possible information I can and keep you up to date, you must do your own research. Do not invest based upon what I say or what anybody else says, for that matter. You've got to do your own research. The acronym of do your own research, it encourages investors to complete due diligence into a project before investing. And this is so important. I see it all over the place in some Facebook groups that are huge, and on Twitter, and people are like, what's going to pump next? Oh yeah, get into this. I've got $1,000. What should I invest in? And man, sometimes you can use the social media to gauge what's going on out there. Like, you might be able to jump into a pump, because, everybody's talking about SafeMoon. Everybody's talking about Dogecoin. Whoa. It's also, it's also a great way to get burned badly. And unfortunately, a lot of people that are new to this space come in and they don't know. They never even heard of the concept of do your own research. And, hey, you might get lucky. You also might just lose everything. So this is good advice. DYOR. Dark web. What is the dark web? A portion of the internet existing on dark nets, not indexed by search engines. Did you know that exists? There's a whole internet that's not available there, that can only be accessed with specific software configurations or authorizations. Dark web. Probably the most notable dark web website especially in relation to crypto space, was Silk Road. Maybe we'll talk about the story behind Silk Road sometime. It's a fascinating one. Date of launch, a term used for when ICOs will put up their tokens for sale. Day trading. Day trading is the practice of frequently buying and selling assets in order to make a profit on intraday changes in their price. And day trading can be a dangerous activity. If you know how to do risk management well, you might be able to do well. There are people who do well, and crypto is a good place for it because there is a lot of volatility. Day trading is a lot safer in a bull market because typically what happens is you sell at a profit and then just can't get back in, right? As the price keeps going up. It's a lot riskier in a bear market as you can much more easily buy. And then, especially in crypto, watch as that red candlestick just goes straight down 90% or 100%. There's some classic meme videos out there that illustrate this so well. DeFi. DeFi is a movement encouraging alternatives to traditional centralized forms of financial services. DeFi degens, DeFi degenerates, a subculture associated with a disreputable corner of decentralized finance known for pump and dump schemes. I would also put in there these rug pull projects that have occurred too often on both Ethereum and Binance, where these clowns, they come along and they create a staking pool token with some crazy high gains, 10,000% APY returns, and they get everybody to go and lock their Ethereum into this smart contract with the token, their token, whatever this project's token is, and then they do a rug pull and they disappear with the Ethereum. Yeah, definitely degenerate activity. Dead cat bounce. What is a dead cat bounce? A temporary recovery in prices after a prolonged decrease. Decentralized. Decentralized refers to the property of a system in which nodes or actors work in concert in a distributed fashion to achieve a common goal. Decentralized applications, also known as dApps, a type of application that runs on a decentralized network, avoiding a single point of failure. Decentralized autonomous initial coin offerings, DAICO, a method for decentralized funding of projects that introduces a form of governance in the ICO process, allowing backers to vote for the return of their funds if certain conditions are met. Decentralized autonomous organizations, also known as DAOs, an organization that is run through rules encoded in smart contracts. Contracts. Thought that almost sounded like it came out as contrast. There's a C in there. Smart contracts. Yeah. Decentralized exchanges, DEXs, a peer-to-peer exchange allowing users to trade cryptocurrency without the need for an intermediary. Boom. Most famous, Uniswap, Sushi, PancakeSwap. Decryption, the process of transforming encrypted data back into a format that is readable by a user or machine. Deflation, a decline in the general level of prices for goods and services in an economy. Delegated proof of stake, also known as DPoS, an alternative to the proof of stake and proof of work consensus algorithms. Depth chart, a graph that plots the requests to buy, the bids, and the requests to sell, the asks, on a chart. Based on limit orders, the chart shows the point at which the market is most likely to accept a transaction. Derivative, we talked about that today. A financial instrument deriving its value from the value of an underlying asset. Derivatives market, a public market for derivatives, instruments such as futures contracts or options, which are derived from other forms of cryptocurrency assets. Deterministic wallet, a type of cryptocurrency wallet in which keys and addresses are created from a single seed. Difficulty. Difficulty is a measure of how hard it is to validate a new block on a blockchain. It's something that miners deal with primarily. As the difficulty increases over time and it becomes harder to mine. And as more hashing power, I should say, and the hash rate goes up, it becomes increasingly difficult to mine. And this is what provides additional security to the network and also makes it such that somebody can't just come in with a new ASIC or new technology, a new mining hardware and just, snag all of the rewards in every block on the chain. Because as they onboard that additional hash power, it ups the difficulty, right? So digital currency, a currency that exists only in digital form as opposed to traditional physical currencies. Digital identity, information used by a person or an entity to identify themselves to a computer or network. Digital signature, a method for proving the authenticity of a digital communication. Dildo. No, not that. The red or green candles, vertical lines, or graphs showing cryptocurrency market data. I've never actually seen anyone use that term, but okay. Directed acyclical graph. DAG. A way of structuring data often used for data modeling, increasingly as a consensus tool in cryptocurrencies. Hash graph, for example. DAG often gets created when mining, actually, interestingly enough. Distributed consensus. Collective agreement reached among nodes in a network. Distributed denial of service, DDoS attacks. An attempt by a bad actor to disrupt the operation of an application, server, or network by flooding it with traffic. And this is actually one of those things. Maybe sometime we'll dig into the technological aspect and the brilliance of what's going on with the Bitcoin network. One of the technological hurdles that had to be overcome, and that is overcome through proof of work and the proof of stake systems and the way the consensus algorithms work, is that it prevents denial of service attacks. One of the reasons why there are transaction fees, people might ask that, well, why are there transaction fees with Bitcoin or Ethereum? And there's a number of reasons, but one just core technological reason is if there was no transaction fee to send and receive Bitcoin, then someone could just create massive amount of transactions with very, 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 very small amounts, 0.000001 Bitcoin, flood the network with those transactions, which is what a denial of service attack essentially is, and thereby shut down the network with that attack. So the reason transaction fees prevent this is because that would be very costly and expensive to do, even though it might just be a small transaction fee. If someone were trying to send millions of transactions through, that small amount adds up to a significant amount, enough to prevent the denial of service attack. Distributed ledger. Distributed ledgers it is a ledger in which data is stored across a network of decentralized nodes. A distributed ledger does not necessarily involve a cryptocurrency and may be permissioned and private. Distributed ledger technology, or DLT, a database that is shared by multiple participants in multiple places, the basis for blockchains. Okay, we're almost done with the D's here. Distributed network, a network in which the data and applications are dependent on multiple sources as opposed to one location. Dolphin. A dolphin is someone with a moderate holding of cryptocurrency as opposed to a whale who has a large holding of cryptocurrency. Dominance. A measure of Bitcoin's value in the context of the larger cryptocurrency market. And as we've talked about frequently, dominance is dropping. Dorian Nakamoto. Dorian Nakamoto is a Japanese-American physicist who some believe to be Satoshi Nakamoto. Double spending. The potential for a digital currency to be spent twice, which becomes a huge problem if that occurs. Dump. A sudden sell-off of digital assets. Dumping. A collective market sell-off that occurs when large quantities of a particular cryptocurrency are sold in a short period of time. Dust transactions. Minuscule amounts of Bitcoin in a wallet with a value that would be outweighed by the cost of a transaction fee. Dusting attack. An attack that aims to uncover the identity of a wallet's owner. Information that can subsequently be used in phishing scams. Okay, friends, that covers the D's. Hey, I just want to say I appreciate all of you. Thank you for tuning in to the Block Thrasher Daily Crypto Update. I hope you find it useful and enjoy listening. If you have suggestions, I would love to hear those. Let me know. Reach out to me on Facebook through the Facebook group or send an email to info@blockthrasher.com. By the way, please be sure to visit blockthrasher.com. I apologize for the lack of content on that website. That will change. My life is a little transitant, it's good. It's actually really good. It's a ton of fun traveling, doing a lot of different things that have just for this short period made it difficult to post. I really like to go into deep dives on certain cryptos and write those up. I have some in the queue that just have not been posted as of yet. They will be. So please be sure to go to blockthrasher.com, sign up for an account, support the work that I'm doing here. And I hope you just have an incredible Monday. I hope this is really, this is from a crypto standpoint, we are off to a phenomenal start. But I hope that I really hope that you have a great week in every area of life. Love and peace to you all. Have a great day, and I will talk to you tomorrow. See you now. Bye.